Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 21st of June. All right. Now, as we get sort of just down here, just scroll down here, you can see we're just entering the Asian session. Tokyo not quite open, but it's going to be quite interesting to see how they fare, because there's a fair bit of weirdness going on. Well, not weirdness, but so let me just explain what happens after the FOMC. Usually about 24 hours, if there's some sort of change or slight change in policy, it can take 24 hours for that to filter into the market. Now, what we've seen is we saw that initial sort of bit of weakness on the slightly dovish Fed, or dovish Fed, I should say, not slightly. They were sort of saying, they may have to cut rates. So with that, you had the initial sell-off, but now what we're seeing is the follow-through. Okay, if I just give you a look at the dollar index here, you can start to see, the extent of the actual sell-off. There was a couple of trend lines that's broken down through here, which I've deleted off, but it's now resting on sort of this support at 96.60. And you know what? It's looking really dodge. The equity markets obviously like the dovish tone, but you know what? I guess unlike a big change in policy, usually you would see equities up about 2% going through the roof. They're pretty, it's okay. It's almost up 1%, but to me, that's reasonably subdued. The market still isn't convinced yet if this is what is really happening, right? So we almost need a couple of US numbers to back this up, and then we'll see the real follow through in the current trends. Now, if I just give you a look at the major currency pairs out there, now if you're having a look at these, it may look a little bit confusing. Now, these are hourly charts, and I've left the old trend lines where they are. So you can see where the Aussie slowly sort of climbing. He hasn't sort of gone through the roof. Kiwi liked it. They had some stronger GDP numbers out of New Zealand yesterday, so that got a little bit of a boost, but still isn't running away with it. These two pairs have long-term downtrends. So this short-term noise, don't get confused with that. Now, we've got dollar yen. Now, dollar yen's moving to the downside. There's an increase in tension with Iran. There's also, the US-China situation, which is still simmering. And then you've got the US dollar weakness. So there's a number of things piling into that. Dollar CAD is to me, the real big pair. The Canadian CPI data was a little bit stronger. Okay, that keeps the Bank of Canada neutral, right? And compared to the other central banks, that's actually positive, right? So you're seeing a big move down in dollar CAD, and this coincides with the move down in oil also, right? It was around $53. It's rallied $4 in the last couple of days, and that's going to put further downside pressure on dollar CAD. That's probably the real pair to be keeping an eye on. Now, sterling, Brexit, well, they did sell off initially with Boris Johnson, but now he's actually looks like he is going to take this thing out. I think it's between him and Hunt, the last two candidates to see who is the PM. I think it's Boris is going to win. Now, the Bank of England sort of sat on the fence a little bit. They said, yeah, look, we're going to have to raise rates at some stage, but we're lowering our growth forecast. And by the way, this Brexit issue could be massive, a big problem. So to me, they have gone into a dovish stance, albeit not as dovish as, say, the ECB, the RBA, or even the Fed for that matter. But it's very hard to work out what the hell is going on with sterling when you've got the central bank trying to do its bit, and then you've got this massive geopolitical issue, which hopefully is getting closer to an end. I hope, Boris, a little bit crazy like Trump, but you know what? If it gets us a solution, well, then that's a great thing for trading. Now, Euro, it has popped to the top side just above 112.40, but it overall, on the hourlies, yeah, it's going up, but the big picture there as well. Once again, I'll come back to the MyFX Trading Hub, but Aussie, Kiwi, and Euro, well, actually, Euro's been trading sideways across the board, but definitely the Aussie and Kiwi in bigger downtrends, as is sterling overall as well. Now, if I bring you back to the MyFX Trading Hub, I can sort of take you through this on our, data analysis matrix. Now, one of the key things, you just have to understand what you're looking at, right? So when we're looking at the MyFX Trading Hub now, the central bank sentiment, right? This is the big thing. So the Fed has gone into will change from a sort of neutral to a dovish stance. Now, the first where you see this is on the hourly charts, right? So you see what's going on here. Now we're seeing dollar weakness across the major dollar pairs, and that's also being replicated nicely across all the major currencies. So the US dollar is falling. That's nice. But what happens? What's happening in the background? Now, if you look at the overall background here, you got dollar yen, dollar CAD, dollar Swiss, sterling, Aussie, and Kiwi on the dailies all going down, right? It's the overall trend on these pairs is down. So how can the dollar pairs be going down and the non-dollar pairs going down as well? That doesn't make sense because the dollar's against both, right? And that's the same on the weekly charts. That's because the longer term, these ones down here, sterling, Aussie, and Kiwi, are in much longer term downtrends. The pairs above, especially dollar CAD and dollar Swiss, they've just entered into long or daily trends, and weekly trends have just broken. So they are just entering that. So we're in a state of flux where we've got currency sort of balancing in between various things. Now, what's going to happen is the dollar pairs will keep going, and then what that will do is that'll take these other trending pairs, sterling, Aussie, and say Kiwi, back into more of a sideways move if they keep going higher. You know, they've got a long way to go before they go up. So what we have a situation is, you can sort of see what's going on the hourlies, but overall the picture across the board here is very cloudy, right? This is tactical. We're trying to look for trading opportunities where things make sense. Now, because the US dollar, I mean, this thing here has still not broken down through daily and weekly trends. It's getting closer, especially to that daily trend line where it's going to break down through 96, I think it was 60 or 20 or something, 60 on the dollar index. That could go, and then we could see something, gorgeous happen, which is not great for what we had, because we had, say, Aussie in particular and Kiwi in nice downtrends, and they are now going to be diffused with this weaker dollar, right? So that whole trading opportunity falls by the wayside. But as one trade falls, we usually get another one popping up. Now, dollar CAD has to be your focus. Now, I know the central bank is sideways, but compared to everyone else, that's like a positive, right? So everyone's just gone into very fresh ECB, Bank of England, RBA. We're still waiting for the RBNZ, which is next week. So they're all gone into sort of new, lower global growth, may have to cut rates, or this sort of rubbish. So, but Bank of Canada with their inflation, they won't be doing that. So start to look for your CAD crosses, right? That's where the action is. And funnily enough, we've got the major event to finish the week is Canadian retail sales figures. It doesn't get easier than this. Now, to me, with the trends the way they are, okay, hourly, daily, and weekly down, even if the retail sales figures come out a little bit stronger, it may give us a chance to sell at back towards resistance. If there's huge variance in the numbers and there's massively weak, well then, that blows that opportunity out. But the chance of that is pretty slim. If the numbers come in strong, well, you know what? This thing's just going to keep sliding to the downside. And you've got to start looking around where to get in. Now, dollar CAD has pretty much, if I just bring you back to the charts, it is now in the middle of nowhere. This is the thing. You've got to hit the currency pair when it moves, because afterwards you will not get a chance. So there's dollar CAD sitting there in the boondocks at the moment. Now you have to really come back into the daily charts to try and find some levels. And as you can see, if I drew, and I've deleted some of these, but if I drew the trend line to that previous low, down through 132.50 or 45, that's where it was all over, right? That's your trend line. You don't draw it to the current point. That doesn't make sense. That's just the current market. So dollar CAD is, it's going. And when dollar CAD runs, it runs 400 or 500 points. And it's got the opposite trending sort of central bank focus than everyone else at the moment. Now, to me, I still think, I'm still looking at Euro CAD as the major pair. And if I bring you back to this, I posted this a few days ago. Now, the main part of this trade was interest rate differential. ECB looking to, cut rates, get growth going, all this sort of stuff. The Bank of Canada, neutral. So you come back down to this situation. But, I've just been flushed out. A dip down to 146. What was it? Let me just get this chart up. If I just bring you across, this is a bit of a nasty one, actually, because I just got kicked out. The here's the chart here. So we saw that move down. Okay, back down, where are we? 49.50. Okay, let me get my pen. Okay, so we're waiting for the Canadian CPI numbers. Now, the CPI numbers came out weak. This is the whole sort of situation here. Okay, and the CPI numbers came out weak. I actually got kicked in, but I actually managed to survive the spike, and then it's gone lower. Now, these things do not go down in one day. It'll take some time. Then we trade sideways. Then we get the move down to 146.60. I had my stop trailing by 50 points and got flushed out at 10, but I will be looking to get back into this. CAD, to me, is going up. Oil's going up. CAD's going up. Bank of Canada's neutral. Find some pairs to get involved. Now, the US dollar may not be the best pair, but have a look across your pairs. And this is where you come back to the MyFX Trading Hub. And this is why we built this, is to give you the heads up on which pairs to look at. So you can actually, all you need to find are pairs that are sort of the opposite to the CAD. Now, dollar CAD's going down. That means CAD is going up. So usually if CAD's going up, it goes up with the commodity currencies, which is Aussie and Kiwi. They're all going up. Now, which of the pairs out of all of these has the bit of a negative feel? Well, to me, it can happen at any time. Euro. All right. The ECB have been very clear what they may need to do. Euro seems to me to be the best pair to be getting on against the CAD still at this point, and especially with the CAD retail sales coming out later today, right? That's the key one. Don't forget, you got to close the positions out for the weekend, and we'll see how things go. Core market drivers. It's good to have the core market drivers. If I just get my eraser there, where the central bank. This is traditional trading. You have this in there, and you don't have any of these geopolitical events, right? You get this in the market. Now we're looking for opportunities instead of like just turning the screens on and just start trading whatever you can see. All right, we're getting back to some sort of normality, and hopefully with Boris Johnson getting the nod, hopefully, well, either way, we get a new PM, UK PM, and then we get some decisions around Brexit as well. All right, guys, that's it from me. Pretty interesting sort of day. This is always interesting when after the Fed do make a slight adjustment in policy. And as you can see, it has ramifications across all pairs. And we're still trying to work out where things are going. But at this stage, the dollar looks like it's going to dominate and go down at this point. So we'll see how things play out over the next day and next week. All right, guys, have a good one. Cheerio.